Hey guys, and welcome to this week's technical analysis video where I will be discussing entry points. I'm going to use US 30 as the example in this video. This is not a pair that I generally trade, but I wanted to use a pair that I wasn't used to so I can prove and show you guys how strong and powerful it is just to use one or two technical tools. Let's get stuck into it. So the first things that I always look at is what the overall direction is. We are in an uptrend. So we are creating higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, all the way from down here. Before I do anything is to decipher what the overall direction is on a particular pair and marking out the most recent high point, most recent higher high. As you can see, it is sitting directly here. And the most recent higher low, we also have the EMA sitting on that level as well, which is nice to have as an added confluence. This is not something that I use as my bread and butter technical analysis, but to have an EMA sitting on your zones that are already marked is pretty powerful. Whenever you can get that extra edge in the market, take it, because it is really important to have, is to find those little extra edges that you can have that will generate more success in your trading abilities. This is our daily trading range at the moment. The overall range for this current price action is not very large, so it's a pretty tight range. This is a dream for scalping traders or even intraday traders, especially for a pair like this. It does move quite substantially within one trading session. So let's go down now to the 4-hour time frame because we have deciphered our daily trading range. Guys, this stuff here, you could literally just use zones and horizontal lines. You would do extremely well in the markets. It's all about your psychology and trusting your strategy. For example, having the right psychology to enter your trade when everything meets your rules, having the right psychology to cut losses short, having the right psychology to manage that trade successfully, to add more wins to a trade that is swing trading. It really does have all to do with your psychology, not so much about your technical analysis abilities, unless you're just starting and you don't know how to read a chart. And you've already had 6 months to 12 months of experience, technical analysis should be second nature to you. For example, we are approaching an area of demand where price could respect this level as it has been for at least 1 week. EMA is sitting directly on our level of structure. So in terms of entries, you would want to drill down to the lower time frames to then see how price is reacting at those specific levels. If you're seeing wicking or rejection from these areas of structure and demand levels, you know that could be potentially a point where you would enter a trade. So because we are in live time, I'm going to go back to find other turning points for price action. So let's go back to the 4-hour time frame. This pair in particular for intraday traders moves much more than the Euro USD trade. We can see the movements are a lot more swing trade worthy, whereas US 30 is more ideal for scalpers and intraday traders. Me being a swing trader, my bread and butter pairs are always going to be Euro USD, USD JPY, and Euro AUD. We will zoom in on the daily time frame. We'll find the most recent low point from this leg up and the most recent high point. So this is quite a large daily trading range. Before, we obviously saw price enter in a period of consolidation and much more choppier momentum. This is more ideal for swing traders, whereas at the moment, we've just had a rangy market. We'll use the replay tool to cut off this entire leg. So that is our daily trading range. Let's zoom in to see potential areas where price did turn and correct into. For example, when you already know the overall direction of a move is in a bullish trend, you want to more so be following that daily and overall range, waiting for those corrective moves to then scale in on your trade to buy this pair. There's an area of structure sitting right here, and this could have been a very nice entry by this one bearish candle. We retested that area of structure nicely. So you could have put a long entry on the new candle as it is above this daily higher low. We are trading the trend, and that would have been a big swing trade and a big win. That is just one example, guys. And looking left, look how strong this area of structure was. If we also zoom out and we extend the box out even more to the left, we can already see how significant this area of structure actually is. Didn't even look this far left, but we can already see that our zone has leveled up nicely with the structure to all the way to the left. Price will repeat itself over and over again. It is up to us and our psychologies not to have things like hesitation, fear, or greed that will disrupt our trading results. So it's really as simple as finding those major levels of structure, those potential turning points. When price gets to your levels, depending on how those lower timeframes do react, to then get into that trade as it met all your criteria. If we go down to the 4-hour time frame, you can actually see the exact turning point from this area. Another tool that I do use, wedge patterns, pennants, flags, especially when these things are sitting directly on top of my level of structure, which we can see here. Previously, price did print in a descending wedge pattern on the 4-hour time frame directly on top of our level of structure. And looking left, look at all of this liquidity sitting at this area. So we've got a strong level of daily and 4-hour structure, a ton of liquidity sitting at our level of structure, also have a descending bullish wedge pattern. That's at least 3 or 4 confluences to support this buy trade. It's as simple as that, guys. And as I said, it does not matter how the candles close when it is in the middle of a corrective move. A lot of people no doubt would have been trapped here thinking that it was going to break and close below, moving bearish. However, we have to keep in mind always what the overall direction is, which is bullish. Another little clue that price was not going to continue to its downside move was these 3 candles here. And zooming in at these 3 candles, the downside move has completely lost steam. We have a doji candle followed by 2 little bullish candles, and look what happened after that. Huge push to the upside. It really is that simple. Find your major key levels of structure on the bigger time frames, the overall direction of the trend, look for certain clues as to flags, pennants, wedges, liquidity areas within your structure points, and you have a solid strategy. They're the main things that I use in terms of entering a trade. We would have won that trade and we could have swung it all the way up. Let's go back and do another example. We've got our leg up. Let's find our daily trading range. Higher low to the most recent daily higher high is the trading range for that specific time frame. Looking left always, retest, look at all of this liquidity, guys. This is a strong level of structure with a ton of liquidity. Look what price did here. Retested to the absolute pip before taking off aggressively, closing above this area of structure. And look how many opportunities we would have got to enter buys. At least 3 to 4, and that's on the daily time frame. That's not even going down to the lower time frames. Same thing happening and over again. All that liquidity, strong area of structure, and you can already see that there in fact was also another descending wedge. Go down to the 4-hour time frame, and I'm sure we will be able to see this pattern much clearly. This is our daily trading range, 4-hour wedge pattern, which is very prominent on this time frame. Wedge price is pushed down into this level of structure. Looking left, look how strong this level of structure was. We can go all the way left and we can just see where all of that liquidity is. A lot of liquidity sitting on this structure. Another extremely strong sign to enter a trade. We had at least 4 or 5 opportunities to enter that trade, respecting that level perfectly, never going below it again. Price obviously visited this daily high point, a little correction, and look at this, guys. We have another descending wedge into another area of structure. Look at that. Another entry point sitting right here. Strong area of structure, a lot of liquidity, descending wedge on this level. And what happened after that? Price took off. That would have been a swing trade. Very large win on that one. And we would have closed that. And then again, look at this, guys. Same level. Retest, pushes straight back up. Look at that. Look left. Respected perfectly. Never had price retest this area once it broke out. That was another trade entry, and we would have caught another swing to the upside. This happens on any asset class. If you're trading Forex, if you're trading US 30, if you're trading gold, this sort of price action happens again and again, over and over. You just need to find the right entry points, the right levels of structure, the right liquidity, which is easy to find once you've had minimum 6 months of exposure to the technical analysis side. It's just, as I mentioned before, it's all got to do with your psychology. Did you actually enter that trade, or did you hesitate, missing that trade, which caused you to jump in too late because of FOMO, fear of missing out? And because you jumped in too late, price moved against you and stopped you out, loss or at break even. It's really just waiting for those perfect corrective moves into these strong levels of structure, but having any fear or hesitation that will make you miss the trade. Enter as soon as the trade gives you the right criteria. Go down as low as a 1 hour time frame, because I'm sure, even here is the example, we would see much more than 2 4-hour wicks to the downside, which would give you even more opportunities to enter that trade. As I said, like as a swing trader, sometimes I don't even need to go on the lower time frames, as low as the 4 hour or 1 hour, because to me that there was a strong enough sign to take the trade and to take this much higher. Just relying on those few things, that will give you so much success in the market. You just need to make sure that you have the right mindset. Not be scared, to not be greedy, know when to walk away. Entries really aren't that hard. I personally think is more difficult is taking profit. The entries, taking profit, because when you're floating in profit at a high amount, you're feeling pretty good. You want to hold on to more. Why not try and squeeze that lemon? What happens soon after that? Potentially price can turn around, reverse all of your profit and get you out at break even, or even worse, you would have lost money on that trade, hitting your stop. Listen to your rules. When it hits your first or second area, take that profit. Entries aren't the hard part. It's the managing of the trade and taking the profit and not getting excited about that profit, trying to get more. Be grateful for what you've done, because opportunities will happen again and again in the market. We have 3 or 4 trading sessions a day, Monday to Friday, 24/7. There's going to be opportunities every single day. I don't know anyone that complains about having made profit. I sure as hell know people complaining about losing money because they've held on to profits too long. Something to keep in mind. I just want to wrap it up there, guys. Explain to you the power of just trading zones, levels of demand and supply, and looking at liquidity for potential areas of correction to then enter that trade. Price will always correct itself when it breaks out of major key levels. We've already discussed this and went over it using US 30 as an example. I don't even trade this pair. I don't look at this pair ever. This is the first time in months I've looked at this pair. I already can see my strategy, which is just this basic stuff, works pretty damn good. And it's the same on any asset class. So if you're struggling with your entry, just think, is it your mindset that's making you hesitate to miss the trades? Or is it your technicals? 85 to 90% of the time, it's your mindset, nothing to do with your technicals. Feel free to have a look at my other videos that I've already made. Don't forget to subscribe, like the video, share it with your friends. Stay tuned, because there is a lot more coming.